Hello and thanks for tuning in to our weekly mortgage and economics segment. I'm Megan Abdelaziz, realestateSIOY.com's mortgage and economics reporter. The mortgage rates came back down this week. The 30-year fixed rate is down to 4.66%. The 15-year fixed rate is down to 3.70%, and the 5-year adjustable rate is down to 3.55%. These drops came after the Federal Open Market Committee meeting statement was released. The first thing we looked at this week was the Federal Open Market Committee's meeting statement, which was released after their meeting on Wednesday, September 18th. For all you investors out there, if you haven't heard already, the securities purchases of the quantitative easing program are not being reduced quite yet. This means the interest rates are going to be kept low, which is a good thing for the financial markets and the mortgage rates. The Federal Open Market Committee saw improvements in the economy and the labor markets, but with the still high unemployment rate and the tightening happening in the financial markets, they are still slightly concerned with how the economy will look in the coming months. With what was said in the Federal Open Market Committee's statement, the financial markets took a good turn. Between Thursday, September 12th, and Wednesday, September 18th, the stock markets had an interesting ride. The Dow Jones went from about 15,327 at opening on that Thursday, but decreased by the closing bell. It had then started to come back up on Friday and continued with its increase on Monday, with it shooting up by the closing bell on that Wednesday, ending at about 15,676. The S&P 500 had a similar ride between the same Thursday and Wednesday. On Thursday, it had opened at about 1,689, and by closing Wednesday, it was back up to about 1,725. On Wednesday, September 18th, the Dow Jones and the S&P 500 had hit new highs. The 10-year U.S. Treasury bond yield decreased this past week. On Thursday, September 12th, it was at 2.92%, and it decreased each day. By Wednesday, September 18th, after the Federal Open Market Committee's statement, the yield was back down to 2.69%. After looking at what happened with the Federal Open Market Committee and the financial markets, we took a look at the 5 newly released economic indicator reports. The first report was released on Friday, September 13th by the U.S. Department of Commerce. This report was on the advanced monthly sales for retail and food services for August. In this report, their advanced estimate for the sales of retail and food services was at $426.6 billion, which is 0.2% higher than it was in July and 4.7% higher than it was last August. The second report was released on Tuesday, September 17th, by the Bureau of Labor Statistics. This was the report on the Consumer Price Index for August. The Consumer Price Index for all urban consumers had increased 0.1% from July, according to the report, and was mostly from the increase in spending for shelter and medical care. The third report was released on Wednesday, September 18th by the U.S. Department of Housing and Urban Development and the U.S. Census Bureau. This report dealt with the new residential construction for August, which looks at the permits accepted for privately owned housing units and single-family housing units, housing starts, and housing completions of the new residential buildings. For the privately owned housing units, we saw a decrease in the permits accepted by 3.8%, an increase in the housing starts by 0.9%, and an increase in housing completions by 0.3%. If we compare these numbers for the privately owned housing units to last year's August, we will see all 3 categories improved by a good amount. For the single-family units, there was a 3% increase in permits accepted, a 7% increase in the housing starts, and a 0.5% increase in the housing completions. The fourth report was released on Wednesday, September 18th by the Business Roundtable. This was their survey on CEOs' economic outlook for their companies in the next 6 months. In this quarter's report, CEOs seem to have a slightly less optimistic view on the economy. According to their survey, the biggest change between the second quarter and the third quarter was in the company's capital spending. More CEOs don't see their spending changing that much in coming months now. The change in CEOs' expectations of sales was mostly to seeing no change or even decreasing, and the change in CEOs' expectations for employment just shifted slightly. With these results, the Business Roundtable had a CEO Economic Outlook Index of 79.1, which is down from the second quarter when it was up to 84.3. The last economic indicator report was released on Thursday, September 19th by the National Association of Realtors. This was the report on August's existing home sales. In August, the national amount of existing home sales was up 1.7% from July, and it was up 13.2% from last August. The national median existing home price was down slightly from July at $212,100. As for the national inventory at the end of August, there were 2.25 million existing homes for sale. With both of the housing market reports, it seems that the housing market is making a stronger comeback with each month. After looking at the economic indicators, we took a look at how Americans viewed the economy last week. We do this through Gallup.com's report on economic confidence, which was released on Tuesday, September 17th, for the week of September 9th to September 15th. In this recent report, Americans gained a little bit more confidence in the economic outlook for the U.S. Their poll on Americans' net ratings of economic outlook showed results of 42% of Americans seeing the economy as getting better, while 53% see it as getting worse. Their poll on Americans' net ratings of current economic conditions showed results of 17% thinking that the current conditions are excellent or good, and 35% thinking that they are poor. With these new results, Gallup's Economic Confidence Index increased slightly to -15. The last thing we looked at this week were two reports from the Mortgage Bankers Association. The first report was on the applications for new homes in August and was released on Tuesday, September 17th. In this report, there was a 14% decrease in these applications from July, which puts them back to where they were in June for the most part, since the report for July showed an increase of 14%. The loan size amount also decreased from July to $284,392. The second report was on their weekly application survey for the week ending September 13th. This report was released on Wednesday, September 18th, and showed increases for that week. Their market composite index increased 11.2%, and the refinance index increased 18%. The amount of mortgages that were applied for refinances was back up to 61% that week, and the HARP program refinances increased to 40%. As the mortgage rates hold slightly more steady, we should see some more increases in the mortgage applications. Next week, there will be 3 more economic indicator reports released. So make sure you check back with us next week at trendingsiny.com and here on YouTube to see what the mortgage rates will do next. Thank you for watching, and be sure to like us on Facebook, follow us on Google Plus and Twitter, subscribe to our YouTube channel, which you can do by clicking the button under this video, and don't forget, you can visit our trendingsiny.com website to read the full mortgage and economic report, which is from a division of realestatesiny.com. Once again, this is Megan Abdelaziz with realestatesiny.com. RealestateSINY.com is a full-service real estate brokerage located on Staten Island. If you're looking to buy or sell your home, you can contact us at 718-966-9669, and one of our experienced agents will gladly help you. If you simply just want to browse the latest listings or keep up with the market statistics, you can visit our website at realestatesiny.com.